Good morning, Steve Reed with the Morning Grain Comments. Well, we've had quite a bit of movement overnight in the weather maps. Yesterday, the noon American model showed a little bit less rain than its previous forecasts. And so the market tried to rebound off of yesterday's lows. Overnight, that same model went wetter, and we started out trading futures lower. The Canadian model is not as wet as the American model, and the European model was delayed, but just came out and pretty much is completely dry over the next 10 days across the Midwest. Our weather guy feels it's kind of a combination of the maps, with the American model too wet and the European model is too dry. So he thinks that parts of the Midwest will see somewhere between 3/4 and maybe 2-inch rains, especially east of the Mississippi and points south and east. As far as west of the Mississippi, he's looking for maybe 0.2 to 1 inch of rain, and lesser amounts maybe in South Dakota, western Minnesota, western Iowa, and Nebraska. He thinks then after this rain event early next week, the parts of the western Midwest states and maybe the northern plains begin to dry out. Again, this is the summer, and we just don't know exactly what a northwest flow, what moisture indexes, humidity index, what all this means. But I think that on Monday, during this rain event, the crop ratings for U.S. corn and beans will continue to drop. They do not right now suggest a 179.5 USDA corn yield or a 50.8 soybean yield. I think the corn market might be reacting a little bit more to these changes in the maps than the bean market, because some people feel that while corn's critical month for yield determination is July, for beans it's August. And so there could be time for these maps to actually change, and for the better for beans. On the demand side, we're still not seeing a lot of new business from China for corn. There's talk about congestion in the ports in China. There's also talk about them maybe feeding less corn in their feed ration down the road. Again, same thing in soybeans. We're not seeing a lot of new China demand for new crop U.S. soybeans. Right now, Argentina meal is cheaper than U.S., and we continue to see a sharp drop in palm oil prices due to concern about demand. And so the NOPA data yesterday came out with a crush just a little bit below the average trade guess, but soybean oil stocks fell more than anticipated. Again, the soybean oil market is more about, what do the Biden administration do as far as jet fuel and use of soybean oil. There could be hot and dry weather for parts of Kazakhstan, the Volga Basin, and southern Russia over the next 10 days. We have to watch that pretty closely. Again, I think prices are near the bottom of a potential trading range depending upon the summer weather, but no one really wants to buy it before this rain event. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like yourself would like to be treated.